So here's an example of flat channel breakout pattern. Flat channel breakout is a little different from trend line patterns that it doesn't connect pivotal points. Instead, it draws one line through the center of the stock charts that has been flat or stable for a long period of time, usually over a course of a year. Then followed by a high volume surge and a breakout of from its long-term range. In this case, between $13 and $18. But this pattern, flat channel pattern, is actually favored of many of my students because it has very high profit potential, but it is very rare, much more rare than other trendline patterns. So you don't find a lot of trading candidates. But thanks to my screener, it does give you a couple of these good breakout patterns a week that you can potentially have very nice profit in one or two, just one or two trades. So this chart is ESPR, Esperon Therapeutics. They develop cholesterol drugs, as you can show. As you can see on September of 2014, there is a high volume breakout, price surged $3.50 in just one day. But prior to that, 4 or 5 or 6 days ago, there was 2 high volume days, which further confirms the significance of this single day breakout. And this is actually the September 24th, the detection date of the breakout. And not surprisingly, after the market closed, there was an announcement of phase 2 trial being released for a cholesterol drug, which I won't get too much into the fundamentals, but a lot of times you notice the stock price moves even before the news announcement, like in this case. It's because a lot of insider and a lot of expectation built into the stock that's already moved the stock price, and by the time you hear the news, it's already too late to pull the trigger. So if you bought the stock on this day, given the breakout detection from the screener results, as you can see, the stock just skyrockets from this level, and it just keeps climbing. One good thing about the breakout flat channel breakout pattern is that the stocks usually continue the trend instead of just a one-day wonder, because the price has been sitting still for a long period of time, 1 year, 2 years, sometimes 5 years, not moving, and one day there is high volume surge that's usually breaks the stock out of its traditional trading range and have a lot of new buyers coming in, and the same patterns used by institutions. Institutional traders also show up on their radar screen and further makes the stock go up. But there, even after some pullback, if you are patient enough and wait, by at the pullback, you can see the stock just keeps climbing and climbing until recently it passed at $100.